Welcome to your lesson of the day. It's so important, and you'll hear this time and time again. You should always marry the stock that you're trading. You should be stubborn about it. You should stick to your guns. No matter what, do not move away from that one idea that you thought was going to be the best one. Why wouldn't you marry a stock? You like it, the setup looked great, you courted it in the pre-market, and then you determined you were going to trade it for the entire day no matter what. I don't care what it did. It's April Fool's Day. Of course you're not supposed to marry your stocks. And you probably heard that term like a million times. Don't get married to a trade. Don't get married to a stock. Now you want to go investing? You know what? In the investing game, I got no issues with it, man. Sometimes you believe in the company, you hold it for the long term. Look at Mr. Buffett and Apple. But when it comes to trading, you've got to accept that sometimes if you marry to that stock, there are a lot of reasons that things can go bad. And it's not all obvious. Now, clearly, if you want to get married to a stock long or short and it goes the other direction, you're just going to lose. So that's bad. But there's other things that can go wrong when you are married to an idea, married to a stock, and cannot get away from it. There's a huge opportunity cost. And I want to first deal with the most obvious reason that you shouldn't be too tied down to one stock or to one idea. What if it's wrong? That's plain and simple. So like the easy answer for this is every time you get into a trade, there should be, this is why I want to look at it, this is why I want to get in, this is why I want to get out, and this is where I'm going to be wrong. Now, once that happens, you've got to be able to get away from the stock. However, I understand there are going to be times when, okay, you get out of a certain trade short, but you still like that stock for another setup. So that's fine. But I want to give you an example here of where you just have to stop. So AMD and a lot of the chip names in the today that we're talking about it, it's actually up 1%. It was in a nice consolidation range. You had a 183 on the daily, which was just an absolute brick wall. So I'm thinking, look, short off of a resistance level because that's just been the good level, right? Okay, well, if it's been off that top multiple times and I like the short there, alrighty then, we're going to go in short. But when it runs that stop, notice what you don't see. Now, if you're married to the notion of, I'm just going to trade AMD, I'm bearish, let's just marry this stock. There is nothing after it breaks that key price level where I wanted the short in front. There's nothing indicating weakness. The 3-minute chart, it's all green. It eventually runs over 2% higher before it makes a turnaround. Now, this is the thing. If you like the short off of that level or just in general on AMD, if you're married to that notion, it eventually would have worked out if you just kind of go short all the way up. But that's not the question you have to ask yourself. You have to ask yourself when you marry a trade, not would it have worked out if I just stuck with it the whole day and then it comes back, but what happens if it didn't turn? Now, you can look at this move and say, well, I'm starting fading at 183, fade. Eventually, it breaks back down, so any average price you have in here is going to end up working when it gets back down into 181. You will have made a big winning trade. There's no question about that. But what happens if it continues higher and you see 190? Because eventually, you're going to have an out. Now, whether or not it's a reasonable one or it's a stop on your account, as a day trader, it's a daily stop loss, or whatever it might be, that's going to be a catastrophic loss, even if it ends up peeling. Now, what you can do is wait for it to set up and give you that reason you wanted to get in. Like what is that thing that made you want to go out and court the stock in the first place? The resistance and the sellers at 83, that comes back, you can take that trade. But you've got to understand, it's not just about whether that idea eventually would have worked, because if you get the curl eventually, if a stock you're going long and you like the long and you just keep going long, and it bounces, great. But you've got to look at what happened if it didn't make that curl and it continued going against me. How big is that loss relative to what I win in that hero bounce or that hero pullback? That's the first thing. But the even more important reason you don't want to marry a trade or a stock is the opportunity cost. If you are stuck looking at one thing that is not working, you're going to miss something else. And I cannot say this enough. Because at that exact moment when AMD wasn't working, I went on over to the other stock that I liked short. I liked Tesla short at 178. It never gave you that setup, but I was bearish on Tesla. So the lower high, it showed you 176. Now, obviously, if I wanted to short up this resistance level, it never really gave me an opportunity. But if you know, when we got away from AMD and went back over to something else that was setting up, if you stick with AMD, fine, it eventually works. But the opportunity cost of staring at the wrong thing, you might miss a better trading opportunity. That is the reason to get away from stocks that are not working, because that opportunity cost sometimes is even bigger. Because eventually AMD worked. But without ever going against you, Tesla gave you a better setup. So sometimes that's what it's all about. And I'll give you another one about not marrying stocks. Because it's so easy to say, well, look at that AMD that didn't work out and then jump over to Tesla that did. But what happens when you're married to a trade that is working? Well, you might think, well, what's the harm in that? What's the harm in being married to a trade that's working, Neil? If you liked Intel long, which I did today, didn't get the breakout trade, that's fine. Well, didn't get the dip buy into 44. That's a fail. Let me slap the fail on myself for that. I look back and it's like, Neil, you liked the dip buy at 44 and you didn't take that? Come on, Neil. But you missed that trade. The breakout off the high the day before, that would have worked. The consolidation off the even, that also works. So like the third best long still works out. But if I'm married to the idea of Intel being a good long, then what happens is on the way back in, I'm too fixated on it. When it couldn't hold that same breakout 45 and showed relative weakness, jump away from that. So yes, it worked, but it doesn't mean it's the best thing for you to be in. Why? Because you should always look for something better. Now, if I like that chip name and the chip names were strong, I showed you that AMD on this day was moving well, and I liked an Intel long, and it was at the top of my list, Intel long. But none of that crap matters if Micron is stronger. Does it really matter? Like, who cares? Like, so what? Suck it up, Buttercup. You liked AMD short, I liked Intel long. Whether it worked or not, Micron's a stronger stock. That's just the reality. So once I observe that you can't hold 45, you can't hold VWAP in Intel, well, you can go back on my list and say, well, Neil, you said Intel long, stick to Intel long. No, you can't do that. You've got to be mentally agile in this game. If you like the chips long, there might be a better opportunity. And if you have to scan a bunch of different chip names, you look at I could have looked at NVIDIA, I could have looked at Marvell, ARM, all of those names. And you come out with the fact that Micron is holding VWAP and it's up 7%, and it's the best one. So you pivot to that. It's that simple. Now, does it suck to your ego sometimes when your number one idea isn't necessarily the best trade out there? Sure it does, but the market doesn't care. The market's going to do what it's going to do independent of whatever your ideas were when you sat down. It doesn't matter. It doesn't matter the positions that you have. It doesn't matter the ideas you have. The stocks are going to do what they're going to do. And if you marry to even something that's working, if you're unwilling to then find something better, then you're just going to be giving up potential profits. And on the backside, if you like a certain long and you end up in the weaker one in the group, well, you'll be buying dips into a weaker name. So especially when you're talking about individual sectors, if you are an equity trader, you have a million different things that you can trade. Just in the chips alone, you have a half a dozen reasonably good names that you could be day trading. So if I like Intel one day or like AMD the other, I've got to be able to pivot if Micron or NVIDIA are stronger and are better setups. And that's what it means to not marry a trade. It's not just about getting away from losing trades. It's also having the flexibility to walk over to something which is trading better or better for your theory. Again, there's nothing wrong with, you have to have an idea. There is nothing wrong with that. There's nothing wrong with having a game plan. But you've got to always ask yourself, if that plan is incorrect, where is my out? If I'm going to get back into the thing that wasn't working, what is my very specific reason for doing so? And before you even do that, is there something better that I can be looking at in that moment that sets up for my trading style? That's it. You gotta have a plan. You've got to be able to adjust that plan, and one of the easiest things to do is look for that relative strength and weakness. If you like a chip name long, or just in general you like the chips to the long side, be willing to check for another opportunity that could be the best of the group, even if you didn't pick the right one. You always want to be in the right stocks when you are actively trading. And sometimes that requires you getting away from that thing that you love and going to the nicer, sexier move that's happening right next to you. But if you don't look, you're not going to find it. So do not marry your stocks. Do not marry your trades. Have an open and flexible mind in trading. You can have conviction, but there's a difference between conviction and stubbornness. And the latter is going to get you into some trouble. That's your lesson of the day. Do not marry stocks. Do not marry positions. Just marry a great, fantastic partner, and your life will be great.